I reached an important milestone this week, and I'll share it with you along with updates on my small account margin strategy, where I'm trying to turn $1,000 of Robinhood's money into $1,000 of my money by taking out an interest-free margin loan, investing in high-yield ETFs, and trying to convert those dividends into a NAV-stable investment that I can keep forever. Stay tuned. The content of this video is not financial, investing, or any other kind of advice. You need to do your own due diligence for your investments. My account value grew to over $2,300, but that's not the important milestone I mentioned earlier. I'll get to that later. For the week, my account was up about 1.29%, which is pretty impressive considering it's mostly PAAA, and PAAA doesn't move a lot. It's designed to be steady. So the fact that my account, which is heavily weighted in PAAA, moved up 1.3%, I think is really great. My buying power is down to $15.82, and my margin status is at a healthy 12.82% above the maintenance. Earlier this week, it actually went up to over 13%, but fell back a little bit. I have some pending orders, which I'll talk about later. Let's take a look at the margin screen. Robinhood's margin rate currently is 5%, but I'm not accruing any interest because I'm using Robinhood Gold for a free $1,000 margin loan. If we take a look at the individual positions, you see really nothing has changed. 25% is the normal maintenance ratio for most of my funds. Only NVII is up to 35%. Moving over to Robinhood Legend, I think sometimes there's a little bit of confusion over the dollar amount listed here under the individual account name. As you can see, it's about $2,300. And yet if you look at the market value of my biggest position, PAAA, it alone is $2,400 in value. If you added up all of these amounts, you would end up with more than $3,000. So where does this $2,300 figure come from? The difference comes down to the margin and the fact that I've lost money overall on my margin investments. I own PAAA outright. It's mine. I also own all of these little cryptocurrencies that were awards given to me from various promotions. The confusion comes in with the 4 here. Remember, I originally took a $1,000 margin loan, split it into 4 groups of $250, and invested that $250 into 4 separate ETFs. I take the dividends from those ETFs, split them in half, reinvest half into the security that produced the dividend, and invested the other half into SPYI, my forever fund. Since this experiment started, I've swapped out all of my funds and consolidated 2 of those $250 accounts together. So now I have 3 of what I would consider ultra high yield ETFs, CHPY, NVII, and BLOX. I invested $1,000. If you add all those up and include SPYI, it's definitely less than $1,000. So the way Robinhood creates this dollar amount here is it takes what I have, what I own outright, and subtracts the amount that I've lost in the margin investment, which is why the $2,300 is less than what the PAAA position is alone. This is the price return chart for my investments for the last week. Friday was a holiday, so this represents only a 4-day investing week. I included SPYI for reference. It was down a little over 1%. SPYI was down about 1.6%. CHPY up about 0.9%. BLOX up about 1.6%. And NVII down about 2.3%. Again, this is price return, or NAV. If we back out a little bit and look at the 1-month price return, the 2 things that really stand out to me are CHPY up 21% and NVII down almost 11%. Let's take a look at the year to date. Again, CHPY is doing really great. BLOX is just down a hair, and NVII down about 10%. Let's switch this over to total return. Year to date, things look even better. For reference, SPYI is at 10%, and SPYI, which is based on that, is lagging at 7%. CHPY's up over 92%. BLOX has a total return of over 17.5%, and NVII has a total return positive now, up over 12.5%. Now, let's turn our attention to dividends for the week. Starting with NVII, paid me 27 cents per share for a total of $2.02. That's over a 50% annualized rate of return. I had 89 cents last week waiting to be reinvested. I combined it with this $1.01 and purchased a little bit of NVII. BLOX paid me 11 cents per share for a total of $1.03. Same thing, I was able to combine this 57 cents with this 51 cents to reinvest it. CHPY paid me a solid 75.5 cents per share for $2.22, which is the biggest weekly dividend I've received from CHPY so far. That didn't come until Thursday, and since the market was closed on Friday, I haven't had a chance to reinvest it. So I have queued up ready for Monday morning, a $2.02 purchase of CHPY, and then this $1.11, 52 cents, and $1.01 is a $2.64 investment in SPYI that's also queued up for Monday morning. Speaking of SPYI, I did receive my dividend from it, 53 cents per share for a total of $2.36, which continues my streak of an ever-increasing SPYI dividend. Even though the amount per share was a little less than last month's, the total amount increased and will also be automatically reinvested on Monday morning. So what was the big milestone I reached this week? Well, this chart shows it, and it's chippy. As you can see, these two columns have turned from red to green, meaning I've gone positive. I initially purchased $250 worth of SNOY. In early February, I sold out of that position and reinvested that amount into CHPY. And slowly but surely, it's worked its way up into the positive. Here's a look at the price return chart of CHPY or Chippy and SNOY since the date that I made the change. And although SNOY has done well since then, Chippy has done much better, up about 52.5% in price return alone. And we can take a look at total return and see that CHPY is still doing great, 78%. SNOY really turned it around in late May, shot up, took a lead over Chippy at one point, but since then has fallen back below it again. It's been a long time since I've had any of the ultra high yield ETFs showing a positive compared to my initial purchase of $250. Remember, this doesn't include all of the reinvested dividends, just that $250 bucket. My NVII position is still down about 23.5%. On April 22nd, I sold out of NVII, the Granite Shares version of this ETF, and bought NVII. Let's take a look at how that's worked out so far. This graph starts on the day that I sold NVII and bought NVII. NVIDIA itself is up about 4% on price alone. NVII is down about 9.7%. NVII is down about 5.4%. Let's take a look at total return. We see that both of the ultra high yield ETFs are trailing the underlying. NVIDIA is up about 4%. NVII is about half of that. And NVIY is only about a quarter of NVIDIA's total return. So it appears that my switch to NVII has paid off the last couple of months. My biggest underwater position is what's currently invested in BLOX, down almost 68%. Originally, this was two different buckets, a $250 COIW bucket and a $250 MSTY bucket. As MSTY went down, I sold it and bought HOOW, and that also continued to go down. In late January, I sold my COIW and bought BLOX. And about a week later, I sold my HOOW and used those proceeds to buy BLOX. So I combined what was originally the COIW bucket and the MISTY bucket into BLOX. And those were the worst performing ultra high yield ETFs, so BLOX has the biggest hole to dig out of. This price return goes back to January 29th when I initially sold the COIW position and bought into BLOX. It's not a perfect comparison because it was about a week later when I did the same with HOOW, but this gives you the idea. Again, this graph starts in late January 2026. BLOX is down about 7% in that period. HOOW down about 18%, although it's had a strong rally recently. And COIW is down over 41%. Let's take a look at the total return during that period. BLOX is still leading the way at 7%. HOOW is in the positive at almost 4%. And COIW is down 24%. So once again, it looks like this change of investment has worked out positively for me so far, although HOOW is catching up fast. If you're interested in Roundhill weekly pay ETFs, I've started a video series where I rank them all from very bullish to very bearish. I recently published the June 2026 video, and I think you'll find it interesting if you're into Roundhill ETFs. I still have a long way to go before NVII or the BLOX positions can turn green like Chippy did, but I'm hopeful. The other good news, of course, is SPYI. It's 100% profit because every dollar invested into that has come from the dividends of these ultra high yield ETFs. So when we combine the negative 39% on these ETFs with the profit of SPYI, the account as a whole is down about 15% when compared to my $1,000 initial margin loan. So leave a note in the comments. Do you think NVII, BLOX, or CHPY will be the winner over the next month? And if you found this video entertaining or interesting, I would really appreciate it if you'd like and subscribe. And remember, nothing I said in this video is investing, financial, tax, or any other kind of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.